Hi, welcome to this evening's webinar, Top Tips and Takeaways from the AAII Investor Conference 360, led by Charles Rotblut and John Bykowski. I just wanted to remind all of our webinar viewers that AAII is a nonprofit educational group and is not a financial advisor, and thus is not able to give personal advice. Every investor is different. That's why our goal with each broadcast and article is to educate you to better make your own decisions. A handout of the presentation is available under the Handouts panel of your GoToWebinar control panel located on the right-hand side of the screen. If you have questions for our speaker, please submit them using the Questions panel of your GoToWebinar control panel. Our moderator will select questions submitted and read them aloud for the benefit of all watching the broadcast. Questions that are not selected for the broadcast will be reviewed and addressed afterward. If you experience any issues with the audio or video of the webinar, please consult the instructions on how to change your device's settings or consult the GoToWebinar website for support at www.gotowebinar.com. Reminder that this presentation is recorded and a replay of the presentation will be available tomorrow on AAII's YouTube channel, along with the links to this evening's handouts and to some of the resources discussed. These links will be sent to your email address tomorrow. AAII's mission statement. The American Association of Individual Investors is an independent nonprofit corporation formed in 1978 for the purpose of assisting individuals in becoming effective managers in their own assets through programs of education, information, and research. Now please sit back, relax, and enjoy this live presentation. Take it away, Charles and John.
Thanks, Kyler. How are you doing, John?
Doing great, doing great. Are you all rested from our Investor Conference 360 last week?
I am. That was quite an exciting time, but I am rested. How about yourself?
Doing well. It's fall is in the air. I think it's a great time to sit back, pop open my webinar camera, and to watch some of these good conference shows. It was an interesting event that we had last week, and I'm looking forward to being able to really do a deep dive into seeing some of the sessions.
Absolutely, I am as well. And all the sessions are on demand for everybody to see on this. This was actually our first virtual conference, as John had just said. He here's a little bit behind the scenes shot at us.
Charles, are you sharing the slide deck by any chance, Charles?
Yeah, I am. And they're not coming through. Well, let's try this here. Okay. We'll do this again.
This time for real, right?
Absolutely.
Take two. Is this a take two we're gonna do here?
I think it is a take two. It's a good thing we're not doing this live.
That's true. We'll have Kyler go ahead and edit this part out.
Yes, absolutely. Let's do a share screen here. Sharing. Because sharing is caring. All right. Well, Kyler, I don't know if you can control this. I'm not able to, at least if I can change presenter, make you the presenter, John. Oh, here we go. Let's see if this works. Okay. Should be going now. There we go. So where were we? I'm not really sure.
Well, I think it was kind of interesting because this was our first virtual conference, and 40 years ago we actually held our first real conference, in-person conference, and it was at the Ritz-Carlton Hotel in Chicago, and it was probably less than a mile from the place that Charles and I are sitting in, that one particular desk area right there. And you know, back then when we had the investor conference, we had I think two concurrent tracks going on. When we had both classes that were appropriate for beginners, and we also had tracks that were more for the sophisticated investor. And I have to give kudos to Charles for putting on the program for this particular conference this year. Charles did a wonderful job of pulling together a great range of speakers going on a diverse range of topics. And it was interesting. Our goal this year was really to make it truly interactive in the sense that try to replicate what it feels like to be in a exhibit hall or to be in a auditorium and be able to interact with other people and the speaker. And normally when we have these conferences and let's say we have 1,000 or so people, the speaker is a small little image up on the stage, and our ability to ask a question is very limited. But with this particular conference, I think having everybody up close and personal really made it feel much more up to date and much more interactive for me. I'm not sure about you, Charles.
Absolutely. I do want to stress this was really a group effort. John, you played a big role in doing this. If you look at our mastheads, you see our managing editor, Gene Heinrich, our art director, Annie Prada, both did a lot of hard work for it. Peter Wynn, our marketing director, did a lot for it. Karen Hansen, who we brought in as our event planner, did a lot. And there's a lot of other people behind the scenes. Harry oversees our operations, and Nick, who oversees our IT. So this was really a group effort putting this conference on. And obviously the speakers, and also I'll say the attendees also made it work well. And, it was good we were able to do this virtual. Things have certainly changed with the coronavirus pandemic, but I think we all got better with our AV skills. A lot of our desks ended up looking like this behind the scenes, where we had microphones and ring lights and double screens, but it turned out to be a really good experience, a lot of good interaction, even though we were virtual instead of in person.
And then just tell me about the whole element of how question and answers went during the session.
One of the things we did, and this is why I had two screens up and a lot of us had two screens, is actually on the platform, members could actually submit, attendees could actually submit questions. And one of us, John, myself, Wayne, Peter, Matt, Derek, were all behind the scenes moderating the questions. So we could actually look at the questions, approve them. And we approved most questions, unless the speaker specifically said, I don't want to handle this type of question. And usually it was very personal advice they didn't want to give. But then attendees could actually vote on the questions. So while we're monitoring panels, sometimes we'd see some questions getting 1 or 2 votes. Sometimes it was 15 or more votes, people telling us basically, ask this question, we want to hear the answer to it. So as moderators, it was quite helpful because we could see what the attendees actually wanted answered. So it was a really great interactive experience. And we, of course, passed along those questions as much as we could, time allowing, to the speakers. But I get the sense the speakers actually really enjoyed hearing those questions. And what we've heard over the years is that from both chapter meetings and our conferences, that our speakers love talking to AAII members because they actually do get asked really intelligent and very thoughtful questions.
Yeah, in fact, I think the next slide deck, or the next slide, I think, does it show some of the upvoting process, how it was going on? Is this during your is this during the panel, or was this
this is actually
panel?
during our retirement panel. So we did a panel I'll talk about in a few minutes on investing forward in retirement. And so you can see right here, Christine Benz, she's known for having a bucket strategy, which allocates portfolio by time instead of by, say, risk or what you think the market's going to do. And you can see she actually got 21 upvotes. And so it started off with one person asking that question. I approved it. And when it's approved, it actually went to a queue where other attendees could actually see what questions were being asked. And then they got to basically upvote and say, yeah, Charles asked this question. And so you can see here it got 21 votes. And the second one had to deal with target date funds, and that got 17 votes. So a lot of people wanted to hear the answer for it. And as I said, for us as moderators, it really helped guide us as to what questions to pass along.
And it kind of freed the speakers from having to read through the many hundreds of questions that are out there. And in this case, the audience got to, like you say, get the topics of greatest interest answered. Sometimes you have these meetings and it's the persistent person that raises the hand the most or jumps to the front that keeps asking the same questions, or perhaps even tangent questions. But in this case, we actually got to vote and pick out which ones were the most interesting and relevant.
Absolutely, and absolutely. So again, it helped make it a really interactive experience. And for those of you who were at the conference and maybe didn't catch all the sessions, or maybe you weren't able to attend the conference and now you're interested in seeing the recordings, they are actually available on the Cvent platform. And Cvent's the online conference provider we actually use to host a conference. I was watching several yesterday because I had moderated a conference and wasn't able to catch them all. And so it's really great. And it's also helpful if you saw a presentation and you really want to see it again, maybe you want to check your notes or you just really enjoyed it, they're available. So you can, after we're done here, you can turn them on now. Tomorrow morning for your breakfast, if you want to catch a session, or next weekend, they're just sitting there waiting for you.
So basically, what members should have gotten prior to the conference, or if they sign up now, they'll get a email that has a link, a special Cvent link that goes to this particular event. And if they're registering now for the first time on a replay basis, they'll register and get access to it. If you have registered previously, the link will ask you to log in, and it'll send you a confirmation access code to gain access to the overall website that we have, where all the information is located. So what we have on the website is we have, first of all, a complete schedule of all the sessions. You could download and take a look at a PDF of the schedule. And then we have all the sessions are laid out in a chronological order. And what you would do is, in this case, happens to be our opening keynote on day one of the conference, or day two if you count the boot camps. And here, in this case, there was no handout, but if there was also a handout, what you would see on the bottom of the page was a link, in some cases even a series of links. Some of our presenters provided multiple handouts, the slides, as well as some additional information to read. You could then download those particular slides, print them up, and follow along. I know what I did often when I was watching these things, I actually would download the slides, and I could then actually kind of follow along beyond what was being shown on the screen, see what's coming up, and it really helped me understand what each particular session was about, and got me ready to, in effect, anticipate what to expect with these different sessions.
Absolutely. And over the years, we've also seen members actually in the audience. We've had live events sit there with the slides in their laps taking notes. So right there on the slide. So it's really helpful. And we realize some of you
We
watching.
had one speaker that, I'm sorry to talk over you, sorry. We had one of our
Go ahead.
speakers is known for writing on his slides as he's speaking.
Yes.
Jim
Yes.
Paulson. That was kind of fun. But I'm
Yes.
sorry, Charles, you were saying.
No, go ahead. I always love the fact whenever Jim sends me a research report, he is always scribbling on it. It's great to see that. But I was just going to say, for those of you watching who weren't able to join us live, you can get access to it. You just go to conference.aai.com, and you can purchase access to all the sessions. And again, you'll get access to the slides just as John spoke about.
Were there any memorable moments for you? Anything that really stands out that was of interest to you?
Yeah, there's a few. Jack Brennan really stood out. He was, as John mentioned, our opening keynote speaker. Jack's a former CEO of Vanguard, and he gave this really great talk about being actionable and about how to think about your goals and investing for your goals. And one of the things I really liked about it was he kept bringing in his father. He kept bringing in, things his father did and conversations he had with it. So not only was it a very actionable presentation, it was a very personal presentation, where Jack was actually able to interwove tidbits from his life and use it as good examples to get to this concept, as he called getting to Boca, which is basically, what is your big goal? What are you saving for? And what are you investing for?
It really helps to visualize, I think, what it is you're aiming for. The whole notion is, this is my moment or my space that I'm really targeting. And I think when you have that really clearly visualized in your mind, it helps motivate you and gives you the drive to try to put together a plan in place to reach it.
Absolutely. And I know I always love when speakers put in little tidbits, because I do think it helps really help people visualize what's going on versus just, here are the steps and here are the facts. Now, John, I know you moderated with Harry Kramer.
It was a very interesting session. Now Harry Kramer, a former CEO of Baxter, has been a professor now for a few years since he gave up his executive position, and he's also an author. And it was amazing because it was a very interactive presentation. I mean, first of all, it was done. Here we are, and it's a challenge putting on the conference, because we're kind of doing it based upon, I guess, Central Time. We had members from all over the country. We had, East Coast members that were starting off very probably reasonable time in the morning and then potentially going late. In this case, this was a session. I think it was started at 6:30 Chicago time. But then we have West Coast members who, if they wanted to catch the early morning keynotes, had to get up, very early, or stay up late or get caught even in traffic to catch these things. But Harry Kramer, um, he led a very interactive session, and his goal was to get us to think about, what is our leadership and our leadership, and what are we striving to do? What are we controlling as far as our lives, and how can we, in a more active way, really map out what it is that we want to achieve, what's important to us, in terms of family, what's important to us perhaps in terms of religion or work or whatever it is. And his big tip was that since he was in college and at the point in time he met his wife, he has every night basically done a reflective journal, and it helps really kind of ground him and helps him to reflect back on what his day was and helps him think back in terms of what he wants to accomplish tomorrow. And I know you're a big journal fan. I mean, you love to continually make note of things. And I mean, there was no fixed presentation. He almost kicked off a series of questions and comments on leadership and whatnot. And our members that were attending the conference kept, in effect, asking him questions to elaborate on that. And it must have been the quickest hour of my life, because I couldn't believe when time was up and we were out of time to ask questions. But it flew by so quickly, and our members really seemed to enjoy the conversation that was going on, and they were able to interact with him on a very personable level.
Yeah, it was great. So I think like 5 minutes or maybe 10 minutes in his presentation, I do recall Harry saying, you know what? I don't want to keep talking, keep giving me questions. And so it was a really great example of how interactive this conference was, even though it was virtual.
Very much so. Now, in terms of, I know when you tried to organize the conference, one of the things you thought about were potentially tracks, where if someone is perhaps has an interest in retirement or stock analysis, tell me about, what perhaps, I think you probably focused, in case you actually dealt with a retirement planning track. So what were some of the issues or some of the takeaways from the retirement track that you had developed?
Yeah, so we wanted to think about, not only the panel, but also speakers about the different stages of retirement, because it's, some of our members obviously are retirees, some are nearing retirement. We also have some investors who are younger and saving for retirement. So we wanted to really think about it in different stages and really try to approach it. But we also thought in terms of tracks, not just retirement, but other things. What interests do people have, and what problems do our members need solved? And so people had choice of retirement related uh, sessions, had sessions more focused on stock selection and fund selection. We did things on market outlooks. And then the first day, as you mentioned, or pre-day, I did a 3-hour boot camp on portfolio strategies. Wayne Thorpe did a 3-hour session on stock selection. So again, we really try to think about members who really have particular problems or particular interests. Could we help guide them and give them more than one speaker on certain topics they really want to learn more about? And obviously, one of these was the retirement investing panel I'm showing on the slide here.
What were any big takeaways from this panel? Anything that really stood out in your mind?
Yeah, I mean, one of the things I thought about, they talked about, was really figuring out, figuring out long-term plan that works for you. I thought one of the things that was actually quite interesting is, so Paul Merriman of the Merriman Foundation, he's known for very simple portfolios, a two-fund portfolio, a 4-fund portfolio, and he really likes having tilts, basically taking a portfolio that maybe you have a target date fund in your 401k, and then maybe you add a small cap value fund to it, so you're tilting towards smaller stocks and value-oriented stocks. Where Christine Benz, she talks a lot about bucket strategies, which I mentioned earlier, which means you're segmenting your portfolio by time. And during the session, someone asked, "Can I take Paul's portfolio allocation and combine it with Christine's?" And it was interesting because they both had to stop and think about it. And the answer was, you absolutely can. And the reason is that with Christine's strategy is really, it's allocating by risk. So your short-term bucket's really what you need to spend over the short term. Your long-term bucket's what you need to allocate over the long term. And Paul's strategies are really investing in equity and really getting an extra return by tilting the stock side of your portfolio towards more stocks or towards smaller stocks and value stocks. So it really was, you could take Paul's portfolios, but using Christine's overall allocation approach and combine the two. So it's a great conversation where you had people approaching retirement with slightly different philosophies, but saying, yes, you can actually meld our portfolios. It was a great example where they actually gave people actionable advice and actually explained in real terms how you can actually combine these two different approaches.
It is so true. And actually, I thought a little bit about Paul Merriman too. And one of the things that I interacted with him was on the presentation of the Clunan Award for investment education, but also he then did a presentation on how one can very simply do a series of minor adjustments to your overall portfolio allocation. And I mean, very minor things can have a big impact on your rate of return. And in this case, you could take even a target date fund, which kind of adding on to what you were talking about, Charles, you could take a target date fund, which has a nice glide path and will help you achieve your retirement savings and also guide you as far as income in your retirement. But if you add a little bit of small cap value to that particular allocation, it'll potentially boost your rate of return long term, and it give you a little bit of diversification as well. But even how just a small change in anything you do in terms of keeping your costs low, a small 0.5% change over a typical 30-year, 40-year build-up to retirement will have a big impact on how much money you have, and it'll also have a big impact on how much money you get to spend in your retirement. And so it's great advice either as we as investors or even for our children or grandchildren, is that costs are important, having good allocation is important, taking a long-term perspective, being able to save early. Those are all key points. And Paul Merriman has a storied career, was a stockbroker, saw that really as a broker, he wasn't out necessarily to help his clients as much as he was to help really break up commissions. And often the best thing is to take a long-term perspective, and really has sort of to devote himself more to good financial planning for individuals. And now he's really focused on education of the individual investor and how they can go ahead and try to achieve their financial dreams through simple programs of asset allocation and financial planning and just keeping their costs low and trying to save for the future.
Yeah, absolutely. His talk about just that small difference, how it really adds up. And people, it's easy to overlook, but you don't realize that small difference. It's not that money you're saving this year, but that money you save this year compounds over time and you keep adding to it. And it's a snowball rolling down a steep hill. It's small when it starts and huge when it ends.
And that kind of comes into play, I think, even with some, Christine Benz. I think you had some thoughts about her in terms of the sustainable rates on the takeout end.
This is interesting. So Christine gave a separate discussion later, later in the day after retirement panel. Title, is this a terrible time to retire? And one thing she talked about was the concept of withdrawal rates. And so withdrawal is, what can you take out of your retirement portfolio and what's the maximum percentage you can take without outliving your money? And one thing she pointed out was that, if you retired, say in, 1990s, things are great. You can withdraw pretty much as you want from your portfolio within reason and live a great life. But had you retired sometime, say in the late 60s or 70s, where you obviously had a stock market crash in the 1970s, you had the high inflation, you really had to take a low withdrawal rate. So we see these stated withdrawal rates and they're looking over a long history, but the real withdrawal rate you can take, it's really dependent on when you retire. And that's the one thing investors do not have any control over, is what sequence of returns or what order of returns and what will those returns be over our investing time horizon. We could be blessed with really long extended bull markets, and we can encounter terrible times. So, and she really hit on the point that the big key is to be, if you're retired, to have some flexibility with your withdrawals, have the ability to perhaps cut back when the markets aren't doing so well. But the markets are doing well, realize that you can spend more. Perhaps you want to build up your emergency savings a little bit more. So just realize that retirement itself, there isn't this one magic number you can follow when it comes to withdrawing money out of your portfolio that's right all the time. And I just thought it was a really good example she gave, as people can see on this chart from her presentation.
Very much so. But you know,
Mhm.
beyond retirement, we also went into, I guess, we had tracks that dealt with stock and stock analysis, and we had a factor panel. And here you're bringing up Jack Bogle. Any takeaways with Jack Bogle?
It's really got to the concept of factors, and factors are basically quantitative characteristics of stocks, have been shown to lead to higher returns historically. And one of the things he talked about was value momentum, value buying stocks with lower valuations, momentum buying stocks that are outperforming. And one of the reasons he said that they actually persisted for such a long time is that there is risk because value can perhaps underperform, momentum can underperform over periods of time, but they're tough to exploit, meaning that it's tough to go in and perhaps take a position against them, or really try and say, okay, if I know value is going to be growth, I'll buy value stocks and I'll short sell growth stocks and I'll just collect the difference. Because of how they actually perform on a year by year basis, it's really hard to actually capture that gap in returns. And as a result, that really means that these factors will actually continue to last, because what we see sometimes in finance is people might find out, hey, this strategy works, I'm going to follow the same strategy. And then all of a sudden, the advantage of that strategy disappears. But when you have a strategy that's really hard for too many people to follow, or too many people to really capture through hedge strategies, that means that characteristic is going to continue lasting into the future. And value momentum are two of those type of factors.
Makes a lot of sense.
Yes.
You know, one of the sessions I happened to moderate was Ray Rondo's, and you know, one of the things that Ray focused in on was how one can use technical analysis and charting to complement a stock selection strategy, where you could potentially find uh, stock ideas or find attractive companies using a fundamental approach, and then use some technical indicators to help determine when it's a good time to go into or out of a particular position. One of the things I liked about Ray's presentation as well is, beyond the presentation, Ray actually gave a couple extra handouts. So he produced a handout that I think it had, in this case I took just a screenshot of one of the first elements to it. He had definitions of some of the indicators that one could make use of. So here is RSI, how it's calculated, how it's used. So he had an additional handout that's available for our conference viewers to go ahead and get a kind of a little deeper dive and some background information on some of the factors that he was discussing.
Absolutely. And Ray's been a great asset to the organization, running our New England chapter for several years, and we're doing some more exciting projects with them as we speak.
And the other kind of session that I moderated, which is interesting again. So I got all the fun sessions in the sense that sometimes I got speakers who didn't do traditional presentations, but Robert Hagstrom, well-known value investor and well-known individual who has been writing books on how to invest using Warren Buffett's strategy. And the first book he did, I think The Warren Buffett Way, dealt with really the quantitative factors that Warren Buffett uses in terms of looking at the quality of an investment, how to judge it, its ROI, its strength, its analysis. So his first book really focused in, and it's a bestseller. We even have a screen we developed using his initial book up on our website for members, where they can go ahead and find Warren Buffett type stocks. So his first book focused more on the quantitative elements. He then did a follow-up and thinking, well, what are some of the qualitative type characteristics that Warren Buffett looks at when it comes to identifying good investments and how one thinks and how one makes decisions. So it was a very interesting discussion, and he talked about how he got involved in it. He talked about how value investing has potentially changed. And one of the takeaways was, how does one even look at, has really even GAAP accounting failed us now? Because when Warren Buffett got started, and he used to work with Benjamin Graham, they were able to look at assessing a company's worth just through book value, and based upon the balance sheet, could determine if the share price was fair or not. So much of a company nowadays is tied up in intangibles or people or intellectual property that isn't necessarily well accounted for on the financial statement. So we talked a little bit about a diverse set of topics, how one can go ahead and value companies, and some of the qualitative factors that are being used when Warren Buffett makes a decision as far as taking a long-term perspective on buying a company.
And I'll give people a quick preview. I actually talked to Robert this morning. We're going to have an interview with them in the November AAII Journal. Robert and I ended up doing kind of a deep dive into to valuation and to analyzing companies. So it's a really interesting conversation. But as you said, John, he covers a lot of topics, and we also got into Warren Buffett's history and about how he developed the mindset he has. So yeah, Robert's a really talented writer. I think I surprised him this morning when I pull a book of his that's about 20 years old. But yeah, very interesting presentation, and what a good conversation to watch.
I mean, the other track that you kind of developed was one that dealt with really income investing. And I mean, we had probably a lot of the topics touched upon income investing, but here's an example of some of the ones that specifically touched upon, how to use annuities in retirement, or how bond investing, what kind of approaches one can take in a current low interest rate environment. And I think Derek Hagstrom, if you advance the slide, also did a presentation on equity investing, and in overall elements to how the Federal Reserve can deal with these things. So these are just samples, I think, of some of the webinars that deal with the whole issue of how one pulls income from your portfolio and how one deals with income. I mean, I can't even think. We also had a couple of speakers, economists, that talked about the overall market. I mean, Christine Benz touched up on interest rates. I think I'd be hard pressed not to find at least one mention of interest rates or inflation in any of our presentations this past week. I'm not sure about you, Charles.
Yeah, no, not really. It was interesting because a lot of people actually, it was a good thing about our conference. A lot of people thought longer term and try to get people to think about their strategies versus, worrying what's going to happen with the debt ceiling and what's going to happen with, supply chain issues.
Yeah.
Obviously, Jim Paulson gets into a bit. As you can see here, he's not afraid to take a chart and write on it.
No, and it was fascinating. Again, another quick hour. I mean, these hours go by quickly when you watch. You think, sometimes, sometimes you watch, a baseball game, and an hour could feel like it takes 2 hours to go by. But when Jim Paulson is speaking, he has a great presentation style. He'll first of all, he'll have perhaps a set of bullets of what his theme is, and then he'll have I've got 5 themes. In this case, perhaps I'll deal with valuations, or is the stock market expensive, and then he'll go into a deep dive on why his particular opinion, what's behind his particular opinion. In this case, he was talking about valuations, and he was making the argument that perhaps the benchmark we use for whether or not the stock market is expensive or cheap has changed over time. And perhaps 14 was a reasonable PE ratio using trailing earnings. If you look back to the first, 100 years ago, up to perhaps 1990s, that was perhaps a lot of correlation existed when the PE of the market got a little bit, got much above 14. The market went down. If it got low, the PE went low, meaning it was cheaper. The market tended to bounce back. But really, he saw since 1990, there's been kind of a disconnect between the historical PE and future market movements. And he thinks really since then, perhaps the more normal level for what's a normal PE over the last 30 years is really 20.5. And the other point that he wanted to make is that when you talk about trailing price earnings ratio, the overall price of the market relative to the historical 12 months worth of earnings, the important part to consider is that at the start of a bull market, especially one that's when you're coming out of an economic recession or economic downturn, is that initially the PE shoots up very high because your historical earnings are either very low or negative. And then for the early part of the bull market run, even though the market is still going up in price, the earnings goes down and the PE goes down. And that was the point he was trying to make with this slide here, is that he's anticipating perhaps earnings coming in this year at $2.20 for the S&P 500. If so, that'll push the PE level of the market down, even if it doesn't go down itself. So his point is that the market is perhaps fairly valued. Doesn't mean we're not going to have a downturn at some point in time, but it's that expensive because earnings, because of last year's sudden economic shutdown and our slow rephasing of the economy, is perhaps so much cheaper. So again, that's just one point. I'm talking about one point that he made in his hour-long presentation. So I was fascinated the whole time.
Jim's a great thinker.
Yeah.
We also had Sam Snowball talking about the market. And there's two things I like about Sam. One, he's a market historian, so he really looks at the past and uses it as a reference for what's happened. So obviously we've had some volatility recently in the market, particularly in the NASDAQ. But what's interesting, when you look at how the length of time between 5% declines, the streak that we just had, well, it really goes back to 2020. It was the ninth longest since World War II. And typically, since World War II, we've had a 5% decline of at least 5% once every 6 months. So this is an unusually long period. But the other thing that's great about Sam, not only does he bring a lot of humor to it, but he's a great storyteller. So he doesn't just say, here are the numbers. He really tries to give you stories, give you visualizations to talk about it. He was talking about market breadth. He was saying, you could basically have 2 horses and carriage pulling the market, or you could have 9 horses and carriage pulling the market. And obviously, you have 9, you're going to get a stronger pull in one direction. So if it's moving upward, you obviously want more horsepower to drive the stocks. So those type of analogies combined with a sense of market history and really being able to show you visually what has historically happened, I always think is a really good way of kind of giving perspective on the market. And it's interesting because, as you said, Jim's really good with his charts and writing on the charts, and Sam's more about, let me show you these tables and numbers and then give you the story behind it. So both are excellent strategies and both are really good at providing color as to what's going on in the market, but they also have, different styles and a different way of presenting their viewpoints. And so I think they're both entertaining, and we did pretty much have them back to back, which worked really nicely in terms of scheduling for members to actually get that contrast between the two.
I agree, and and I mean they're both great storytellers. They're a little bit different in their approach. The one is perhaps a bit more low key. One perhaps is a bit more aggressive or interesting. So I enjoyed them both.
Yes, I don't think I've ever walked away from a presentation of either where I haven't laughed a little bit. So both are
That's
pretty
true.
entertaining. And then obviously we did some stuff on stock analysis and valuation. And John, I think there's a session
Yeah, I
you
did.
actually were involved with.
I did. It was first of all, I mean, these were boot camps, 3-hour-long boot camps. I know you did one, and Wayne Thorpe did one. And Wayne Thorpe's was on the area of stock analysis and valuation, and he kind of had 3 prongs or 3 developments over the course of his presentation. He talked about the notion of how one can use stock screening, and then he pointed out resources that we have as members on our website to get ideas. And then he talked about the whole notion of how one goes ahead and goes from having a list of candidates to narrowing it down. He talked about top-down approach versus a bottom-up approach, went through a ROE analysis as far as how one takes a look at how good a company it is, and talks about the valuation metrics that one can use. And one of the slides I kind of got a kick out of, and this is probably a little bit earlier on in his presentation, and I think he probably has over 100 slides that you can download and examine. And this I thought was, to me, kind of kind of a fun summary slide that I threw in here, and it's the economic cycle, and it talks about the sectors and segments that typically perform well in different economic sectors. So if you are doing a top-down approach and you're making some assessment as to which way the market is heading, whether your economy is in a peak or expansion or recovery, which stocks typically do well? I thought to me it was a nice quick summary, very quick visual understanding of how what segments do well. We talk about sector rotation all the time in the marketplace. Even we're talking about it probably a lot this week, as what impact is coronavirus going to have on the economy, oil prices. Day like today potentially. If the news about the impact of the various inoculations, vaccinations taking impact, and the Delta variant going down, and the economy starts to go up again, what kind of sensitive stocks would do well? And to me, it's a very interesting slide, and it's just one of many that Wayne presented in the course of his 3-hour session.
And then as I said earlier, I actually did a portfolio strategies boot camp. So I did mine in the morning. Wayne did his in the afternoon. And my boot camp, I really focus on 7 different ways people could build wealth. I try to think about actionable strategies at a portfolio level. And so we discuss things like portfolio allocation, discuss taxes, behavioral things. But one of the things I also talked about was retirement. And a lot in finance, we talk about investing, we talk about stocks, we talk about bonds, how you should allocate your portfolio as you're young, as you get older, and then as you move into retirement. But one of the things I point out to people is that what's often lost in the conversation is all these big decisions you have to make once you're in your 60s. And so, one of the things we try to do at AI in general is try to get people to think bigger picture and really take a step back from everything. And one of the things, once you start turning age 60, or if you're in this phase right now where you're between age 60 and 70, you're starting to think about retirement. Well, you have a lot of big decisions to make. You need to start thinking about when you're going to retire. It's really helpful to actually have a cash balance built up. And even our founder, Jim Clinton, talks about this, because the day you retire is the day you stop getting that paycheck and you start having to live off your savings. And you want to have a cash cushion of 2 to 4 years of living expenses, because if the market decides to drop right after you retire, the last thing you want to do is sell stocks out of your portfolio when they're down. So you want to think about that, but you also want to think about things about claiming Social Security, and I talked about this. If you claim earlier, obviously that gives you certain lifestyle choices, but if you delay, you get more income. And with Social Security, one of the things I point out is that's an inflation-adjusted annuity that you get from the government. So you don't have to shell anything from it. You've already contributed over your over your career. And if you're the higher earner, when you claim Social Security, if your spouse is a lower earner, that's going to affect their benefits should you be the one who passes first. So there's a lot of discussion, thoughts about that. You also have to sign up for Medicare. And so a big part of my presentation is getting people to just kind of think about what are these small things that you can do that really have a large impact. And so here's an example of these actionable things that you do want to give thought to. Make sure you do these type of things, such as signing up for Medicare, but also making sure you practice retirement, meaning if you envision a certain lifestyle, start trying to do it while you're working. So if you realize, you know what, I don't necessarily want to golf 7 days a week, you're realizing that out before you've fully commit to doing so. So, it's really what we try to do at Association in general is get people to take a step back from all the noise and think about, okay, what actionable things do I need to do? And what actionable things do I need to think about? And as I said, all 7 topics I touched on are available for people to watch right now.
Any other takeaways or suggestions from the speakers? I mean, the boot camps were a great deeper dive on how to study something, but you've got some suggestions here that kind of are interesting.
Yeah, so we had a few. One of them actually came from a panel, John, you were moderating, on factors with Larry Swedrow, who got in this conversation. And John, as you remember, Larry was very quick to call up slides in the middle of a panel discussion, so it made it pretty entertaining. But there was a discussion about small cap funds, And one thing Larry Sweater pointed out was you want to actually look at what the funds are doing. And he used the example of Vanguard's small cap fund actually holds larger companies than, say, DFA's, or I think it was Bridgeway's funds, where they actually held smaller stocks. So both were both small cap stocks, but some were bigger small cap stocks, and some were actually funds were actually going more towards a micro cap arena. So I thought that was a really good example of how you shouldn't judge a book by its cover, or in this case, a fund by its name.
It's very
Uh,
true.
Like Kelly Erb, who actually spent her session talking about taxes, did a great overview of the changes in tax laws we've seen over the past few years. She gave the example of if you're willing to go on Twitter and you can look at Twitter without actually signing up for Twitter, using this hashtag tax Twitter, where people who are experts in taxes, including Kelly, actually use to stay abreast about what's going on and talk about some of the tax law changes. And obviously, as we speak right now, we don't know what's going to happen with changes to tax laws. There obviously Congress is debating about the debt ceiling. The Democrats are debating about how much to spend on the quote unquote human infrastructure bill. So we don't know what's going to happen, but you can, if you want to keep an eye on what's going on with these proposals, if it looks like legislation is going to be passed, you can go on Twitter, start seeing this, using this hashtag, and start seeing what experts are actually saying and what they think is going to happen. Um, Terry Savage, a longtime friend of AI, of the association, she gave out the website living2100.com, and this asks you a series of questions about your activity, about your family, even about your diet, and it uses that data to give you an estimate for about how long are you going to live for. And one of the things she said that you might get a number that's longer than you expect, but it also kind of gives you a sense if you're trying to think about how you allocate and what decisions do you make. It kind of gives you a time frame for what that number is. And as she joked that if you don't like the number, maybe you want to start making changes to try and boost it up a little bit. Uh, Christine Bench, you'll see the website on here, opensocialsecurity.com. And so I mentioned a few slides ago about claiming Social Security and thinking about what your claiming strategy is. Christine pointed out that this is one of the sites available on the web for free. You can go and start plugging some numbers if you're trying to decide, do I claim Social Security early? Do I wait till I reach full retirement age, which is the age you get your full benefit, or maybe perhaps delay until 70? This is one of the sites you can actually use for free, and one of the few sites that does this for free that allows you to run some scenarios to see what might be appropriate for you. And then, John, I know you mentioned earlier about Paul Merriman with the small increases in returns, and how just making, getting a little extra return has a big outcome on wealth.
Yeah, it's amazing. I mean, and he had a number of great points to make, but that was just one of them. And I think even um, a notion of how one gets started and how starting early can have an impact. And I think he gave an example of how to go ahead and just get if you have a grandchild, start saving money now. A little bit savings now will have a tremendous impact and tremendous growth over the course of that child's growth and career in life.
Yeah, I got to say, I know with you, John. One of the things I love about our conference is you have these speakers will start talking and they're comfortable, and all of a sudden they'll give you a hidden gem you weren't expecting. That's actually a really useful piece of advice or a really good tip. And we see this constantly. And it's a little bit value add that I think our members get from from conferences, and I certainly benefit from those as well.
I agree. And I guess, before we close, I guess, I know you've got a page here that again indicates how to go ahead and sign up for the conference now, if you want to go ahead and still access it. If you had not signed up previously, if you have signed up previously, the link that you originally were sent to access the website, the conference should work. Anytime I think if you log to a new computer, it'll ask you to verify who you are again. And that'll also be true sometimes over time. It may ask you to go ahead and re-verify that you are in fact who you are. And it just takes often just a moment, then you get a quick link back from them, either to your phone or to your email inbox.
Absolutely. And, it's great because we do have many hours of programming available to it and really good quality programming. So you definitely take advantage of it.
And I guess beyond our presentation tonight, I'm not sure if there are any other points you want to make, but I guess do you want to plug any presentations we have coming up in the near future? You go forward one slide.
Yeah, absolutely. So next week, we're going to actually introduce our Prism Wealth Building Process Academy. And so we're in the process right now of actually introducing two new member benefits. One is our community. So we're actually creating online communities available through AI.com that'll give members the ability to connect with other members online. So not just at the conference, but actually going forward, these will be forums that actually are part of AAII.com. We'll be able to interact with members about different topics, and we're looking to grow that. But the other thing is my Prism wealth building process. So some of you might have seen this or seen me write about it in a journal. It really is a 5-step process for building a plan to help you achieve your goals. So it's really it's a framework is what it really is, where we help you focus your investing strategy. So we're not telling you exactly how to invest, but we're giving you the framework for you to develop your own guidelines so you can achieve your goals. And so we've created this academy to actually do a deeper dive. And when you go through it, the great thing is not only will you learn a lot, when you complete the academy, you will have your own financial plan, which you can then use to guide your own investment decisions. And certainly if you work with a professional, you can give it to them and say, here's how I want to invest. We'll also be doing an AI Platinum open house.
Yeah, for some reason your slide is not showing all the full details, but that's going to be
Yes.
presented by Wayne Thorpe. It's going to be on Monday, October 25th, 2021, and it's going to be at 2 p.m. Central Time. So we wanted to make sure that you note that we're going to be doing a special Platinum open house. You can talk about it here. I'll repeat the time after you give a little bit of description here, Charles.
Yeah, so absolutely. Yeah, so our AI Platinum service, it actually gives you full access to our premium products, to our premium newsletters. So you get access to our dividend investing portfolio, which is run by Derek Hageman, Wayne Thorpe and his Stock Superstars reports, the VMQ Stocks portfolio, which I run, plus our A Plus investing service, which has a lot of great tools, including a brand new online stock screener. And so Platinum actually combines that to one service and gives you access to all of it.
And again, the special time is Monday, October 25th, and it's going to be at 2 p.m. Central. So if you want to ask your questions live to Wayne, make note of the special time.
Absolutely. We hope to see you there. And obviously, anytime you want, you can actually go to our community page on AA.com and you can see a list of all upcoming webinars.
Yeah. Now, before we leave here tonight, I actually have to say thank you to Kyler Wolf. This is Kyler's last evening producing the webinar show. We're gonna miss you, Kyler. You did a great job. I enjoyed interacting with you, and you made Charles and me look very good, much better than we deserve to look.
Thank you guys so much. I really appreciate that. I didn't have to do much to make you guys look this great. You're wonderful on your own.
Oh, you're too kind, but I've seen some of the editing you've done on Charles's videos, so you're being much too modest.
I very much appreciate it. It's very kind. But thank you both tonight for a great webinar, as always. I want to thank everyone for attending tonight's webinar. Links to some of the resources discussed tonight will be sent to your email address. And yeah, so thank you all so much. We wish you all viewing good health, good fortune, and a great evening. Thank you.
Good night.
Good night.